Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. And also make sure you check out my weekly trade zones, $50 per month. That's it. This is what one of the trade zones looks like. This was a intraday trade zone from this morning that I drew, and we came right down to it, touched it, and then look at this massive bounce. Again, links down below in the description, but everything's time stamped in my free Discord trade room. Links down below. But look at this. I said this morning at 5:58 a.m. Las Vegas time, looking for a lower trade loan long at 46.1950 at 21.50. This is what I posted, and then this is what the outcome was from that same exact trade setup. So, and that was at 8:09. So, but in this video, we're going to talk about this head and shoulders that I posted. I said, hey, head and shoulders with fib extension targets for you guys to play if you wanted to. And this video is going to be about how to draw fib extensions with a head and shoulders pattern and the ways to trade it. So let's pull up the chart, and here is the same exact head and shoulders I was talking about. Shoulder, head, shoulder, right? And here was essentially our neckline, okay? And I grabbed my fib extensions, go from this high to this low right here. I'm not going to do this low because when we go back and we look, we only had this low here, right? It was a double bottom, okay? And so we're going to just go from this high to this low because that was all the information that we had when I drew it. And think about this, okay? There are two different ways to trade this pattern, okay? And you can either trade it to where you short, and you look to short the stock, or in this case, the Emini S&P futures, right? And if we get down to 127, you take some off. So let's say maybe you took 3 micro contracts, 3 regular contracts, depends what type of trade and risk you're willing to take. But essentially, if we break above here, that's your exit, right? Or you could say, hey, if we break below here, like we did, you could use the right shoulder as your exit. But as we go down, you could say, hey, let me start taking some off here. If we go lower, take some more off. And if we go to the 200%, or which is essentially 100% of this move just flipped over, that would be your ultimate target. That's one way. The other way is, which I like to trade even better, which is if we get down to the 200, I'd rather look to be a buyer because of my risk reward. Also, look at this right here. Okay, look at this nice consolidation level that broke out and never got retested. Okay, so my logic behind this would be like, hey, I really like this 200. Let me get long and maybe look for maybe a 1 or 2 point bounce, okay, with maybe a couple points worth of risk. So it's about 1 to 1 risk reward. If you want, you could say, hey, let me look for a bounce once we come to the 200, get long here, and then look for a bounce at the 1618. But let's see what price did, right? So price kind of went along, okay, went up, went down, and this is the reason why I don't trade the pattern itself, right? Because you would have been stopped out if we took above this high, right? Kind of it started to fall and then it went up. But if you trade from this whole pattern for a short, you're only doing a 1 to 1 risk reward with a lot of risk, right? Now you might be okay with that, but look at what price did. And let's zoom in right here. We came right down okay, to that 64 level, literally took maybe 1 point of risk, and here comes the bounce. Okay, again, for a couple points, or a bounce all the way back up to the 1618 some pattern. So there's just different things to look for in different ways to trade this pattern. But again, to sum this video up, I like to play the 200% bounce, right? Because what the logic behind it is, everybody that got short, their ultimate target is 200%. So as we get to 200%, what's everybody looking to do? Cover their shorts. Then you have another group of traders that understand the markets, and now you do too, hopefully, that when we get to the 200%, you're now going to have a lot of new buyers step in, because they understand that this is the 100% move, or the final move of this head and shoulders pattern. So you have a lot of shorts being covered, meaning they're kind of covering their shorts, so there's buying pressure. And now you have new buyers stepping in and buying too. So with that being said, it is going higher. Okay, you're going to just have natural buying pressure to the upside with it. So hopefully that helps, guys. Also, one question that, real quick, one extra question that I get all the time is, well, if it comes down to the very first 127, can I buy here? Can I buy here? Can I buy here? Of course you can, right? If price comes down, one way of trading this is you could maybe put an order in to buy here, and then to buy here, right? And if we look right here, price came down, you might have missed it by a tick or two, but then it came down, you got filled, okay? And then you had the nice bounce. Okay. And again, your stop might be below. I would probably lean against this low right here, because it's a significant point on the chart. And so your exit would be anything below here, right? So essentially you're looking for a long bounce, and then take profits, another short, a bounce, take profits. If you get long here, maybe look for a bounce to the 127. Because we see it here, right? We finally fall, come to the 1618, and where does the bounce go? Right to the 127, right? Old support becomes new resistance, vice versa. You know how that game kind of goes, right? So hopefully this video was helpful. If you like it, make sure you guys like the video and check out Discord. Again, free, link down below. Get these zones in the morning, every day, and all that. So till next time, we'll talk to you soon. Thank you.